have the backup. Yeah. Hello, everyone. This is Sergio Marrero, and we're here for another episode of RBL1 Live. Today, we have an awesome guest, Jacques-Philippe Piverger, who is the managing partner and co-founder of Ozonex Ventures. Thanks for joining us today, Jacques-Philippe.
Thank you for having me, Sergio. It's a real pleasure to be here. I'm a big fan of yours and the work that you've been doing to bring more visibility to so many founders and investors who are attacking, important issues from different perspectives. So again, I'm just happy to be here and happy to get into it.
Yeah, no, super excited. We connected at an in-person event not too long ago, and have admired Jacques-Philippe's unique approach to venture. So we'll get more into that. To share a little bit more about his background, for those that don't know, he's a graduate of Georgetown University, also got his MBA at the Tuck School of Business at Dartmouth, has been a serial entrepreneur himself, co-founder, and also a young global leader before now starting his own fund. So if you could share a little bit with the audience, what is Ozonex Ventures?
Sure. So Ozonex is a fund that myself and two co-founders, good friends of mine, started right before quarantine. We all bring a set of experiences that relate to founding companies as well as investing. And we wanted to create the type of fund that we wished had been around when we were building different enterprises. And in a nutshell, that's what Ozonex is. One of my co-founders is Brazilian American, the other is a woman, and you have myself. And our fund specifically backs underrepresented founders, namely women, Black, Hispanic, groups that have largely been marginalized by the traditional venture capital flows. And then separately, we look for those who are solving for challenges that we consider to be of consequence. So we like sustainability, health and wellness, education, future of employment. Typically, it's a large market that's being addressed. It's an amazing team. It's a high margin business, so usually tech enabled. And we see a path to helping them achieve their objectives. Separately, we put on our founder hats and we took a hard look at the venture model itself. And I've kind of described what's been done historically as being very egocentric. So you'll have two or three partners who have a particular competency and industry of expertise and geographic focus at times, and they'll build a strategy around that. But it's very much about they themselves and what they can do. And the reality is 75%, 80% of people who go into the VC space actually fail. They never raise a subsequent fund. And this has been persisting literally from the inception of the industry. And so we wanted to stack the cards in our favor. So as we looked at this approach and we felt that it was not optimal, we incorporated tech and collective expertise to do it more thoughtfully. And so we have a broad and quickly growing community of Ozonex experts who are involved. And we have a point system, and people earn points for bringing in deals, participating in evaluations, being involved on growth teams. They're also able to invest alongside us through special purpose vehicles when we do different deals. And so what happens is our approach, right, the top of our funnel, we believe is more expansive by design. The bottom of our funnel is tighter and more objective. So I'm not able to push through every deal that I would want to push through. So it keeps us honest as investors. And then once a company makes it through our process, they have a broad, thoughtful community of folks who are in it with them and who want them to succeed. So we're able to bring to bear far more resources. That's what we've been building over the last couple of years, and we're starting to see tremendous benefit from it. I'm really enjoying it, and I could go on forever, but I'm not going to do that. This is your show. Let me know what else I should expound on.
No, that's excellent. And that's where I was going to go is trying to understand, in what makes Ozonex unique. You have this network that you've built is like a network powered fund. How did you even come up with the concept, and in trying to innovate on venture itself?
Well, it's partially what I described to you. We all operate in unique ways. One of the things that's been pretty consistent for me throughout my life, I think you're similar, we're entrepreneurial, right? We don't just build businesses. Like everything that I do is entrepreneurial. It doesn't matter what I'm doing. And so if I'm building a venture fund, I'm not looking to do the same type of venture fund that everyone has always done. I'm looking at what's been done. I'm looking at what worked, what didn't, and how do we improve upon it. And so that was kind of the thought process that went through it. In our case, I had a conversation with a good friend of more than a decade, who's been involved in taking companies public herself, and done a lot of different. Like she led the team at Sun Microsystems that developed JavaScript. And maybe 5 years ago, I was speaking with her, and she was speaking to me about her next big thing, which related to leveraging the collective to get better solutions and better decision making. And so a few years later, when myself and my co-founders were building a venture fund and we're contemplating how do we make it better, I kind of pulled that file. She probably didn't even know I was paying attention. I probably didn't know I was paying attention. But I pulled that file and I put two and two together. And I said, we can do something. So that person is now one of our senior advisors and key partner in what we do. And so we're able to bring that in to our model so that we can realize that objective far more efficiently than we otherwise would. I mean, for us, a large part of everything that we do is also kind of the greatest me is we. And she's kind of part of that journey with us, and we have quite a number of amazing folks that have allowed us to make this happen. But hopefully that provides you a little bit more context with respect to how we got to that, both theoretically from a process perspective, but also a little more granular detail in our case specifically.
Yeah, absolutely. And before we go into it, we'd love to dive further into that, but hear a little bit more about you. Like, how did you, graduated with a background in finance, so you're in venture capital, but did you always know you wanted to start a fund? How did you end up starting your own fund? Yeah.
Sure. So maybe it's useful. I'll give you the quick Inception story. I was born in New York City. I grew up in Miami. I spent all my summers in Haiti, and I've been describing Haiti as the place where my family spent most of the last several hundred years. I started characterizing it as such in the last few years, in that I consider myself to be part of 2 million years of human experience. And, I feel that that's far more liberating. So I'm everyone, whoever was, is, and will be. And as people get to know me, you'll understand how that factors into how I operate and how I move in the world. I went to public school growing up, lived in tough inner cities. Probably half of my high school class didn't graduate on time. I somehow found my way to Georgetown. I used to test well and do a variety of things well. After undergrad at Georgetown and business school at Dartmouth, I worked for a couple large investment firms. So AIG Investments, we had over 500 billion in assets under management. And I worked across the private asset classes. And I reported directly to the CEO, Win Nuger. We then spun out with the third-party assets during the Great Recession, and that was about 100 billion. And we created PineBridge Investments. I went there in a similar capacity. So during that time, I was involved across the private investment stack. So hedge, private equity, venture, real estate, over $10 billion in transactions. And then from there, I went and started to kind of lean more into the entrepreneurial side of things. I built a solar product company that I ran as co-founder and CEO from 2012 to 15. During that time, I went from concept to market distribution in more than 70 countries. And, you could find the products at Target, Lowe's, EMS in the US, even though it wasn't meant for this market. And I've also helped to create a number of nonprofits. I call them for-purpose organizations that relate to issues I care about. So some relate to international developing issues, some domestic. One that relates specifically to Ozonex, and what we do is the Council of Urban Professionals. I was fortunate enough to help create that when I was still in business school with some amazing friends. I was on the board for 12 years, and it's focused on empowering women and underrepresented groups to more fully realize their professional potential. And so when you think of the things, and literally what I've shared is barely the tip of the iceberg in terms of things I've been involved with. We could save those for different conversations. But when you think about what I just shared, literally it's what we do at Ozonex, right? It's about mentorship for the founders that we back. It's about investing and kind of loving the game. It's about purpose, right? We're not backing just any company. We're backing companies that are really solving for things that we consider to be of consequence. It's about innovation and entrepreneurship. So again, it's not, our grandparents' VC, it's tomorrow's VC. We're literally writing the book on the future of venture capital. And that's kind of the entrepreneurial type of enterprise that I've always been involved with. And so one of the things I like about Ozonex is that I'm able to do the things I would otherwise be doing anyway, but call it work. And I think that's not a bad place to be.
No, that's great. I mean, especially in walking from working in finance, like, dealing with the larger financial markets, moving from private equity, and then kind of bringing that experience together to starting a fund. And I mean, in innovating, like taking a step back, and it doesn't have to be, you're focused on kind of leveraging the crowd and involving a community in the venture investment process. In your opinion, and in thinking about what more needs to be done to make venture capital more accessible, more equitable, just bring it into the future, what are some tenets that you think about? Maybe that you even haven't addressed yet, or maybe you're not going to, but just to know what's at the top of your mind when you think about it.
Sure. So as you were speaking, I think the connection got choppy.
Okay. Got it.
So I think I missed maybe 30 seconds of what you were saying there. If you don't mind repeating some of it, then
absolutely.
I'll jump in.
The short answer, in being a thinker of what the future of venture capital needs to be like, what are those elements that you think about where there can and should be innovation?
Sure. Now, good question. So there's a few things, right? One is just structurally and unlocking the potential, which is a large part of what we're doing. Lately, I've been describing as the planet. Think of the planet as one big brain. For the last 50 years in venture, we've only been accessing 30% of that brain, because only 30% of the population of the US, for example, has their ideas funded to come to life, right? So if you look at the top companies in the Dow or NASDAQ, the founders all look the same, and they're not women, they're not people of color. And generally, that's the one set of person that has been funded. Whereas the future needs to use the full brain. And it's not charity. It's because I believe that expertise and talent are broadly distributed, and we're doing a disservice to ourselves by not allowing the best ideas to see the light of day. And so structurally, I think that's a huge thing that tends to be undermined and underappreciated as to what that value will look like in the future. And so that would be, number one. Separately, I think the types of businesses that get funded, should be solving for things that are important. It doesn't mean the companies that have been funded shouldn't be funded, but I do believe there's direct correlation between solving for major challenges and financial success, right? And so over the last year, we've gone from 0 companies in our portfolio to 10 companies in our portfolio. All those companies we've backed meet the criteria I mentioned, right? Underrepresented founders, solving for things that are important. But of those 10, at least 6 of them, and like there's another that had, so at least 6 of them have had an up round or they're about to have an up round, right? At significant upticks. And that's much better than the typical venture model and how they've typically, operated and the successes they've had. So we believe there's actually, correlation between solving for things that are important and financial success. And I think the future of VC should look that way as well. Another bit is, just broad base, like more transparency in the model. So if you speak to your friends, I know if I speak to my friends and I ask them, what do they know about venture if they're not investors? Even people who've gone to school, who have grad degrees, most of them have not been involved in looking at companies, knowing what questions to ask, understand the sector. And so they don't participate. So that's something that, in the not so distant future, we think should change as well. So bringing more transparency to the sector so more people understand it. And through their understanding, they're more likely to participate. And I think that's critically important because I know on the one hand, I said the sector is broken and most people who enter it don't do well. That is true. But on the flip side, the top quartile venture funds outperform all other asset classes significantly. So if you look at Cambridge Associates and you look at the performance of funds over 5, 10, 15, 20, 25-year periods relative to top quartile PE, real estate, and public markets, you'll see a delta of anywhere from 400 to 900 basis points across all time frames, right? But then if you look at participation, very few women, very few people of color, very few marginalized groups. So they're also not benefiting from that alpha. And I think the future should have more of that as well, right? So those are some structural things. And otherwise, within venture, there's so many trends. I mean, for us, we're seeing a lot in the mobility space. We're seeing a lot in climate tech that we like. I think there are some real opportunities within Edtech. I can't say I've found them yet, but I believe there's tremendous potential there in terms of creating more opportunity for literally billions of people globally who don't have access to the right kind of education opportunities. A sector that if we spoke a year ago, I wouldn't have mentioned, but we now have a couple of investments in it, is kind of the creative economy, Web 3.0. I'm now a believer, and I think there's going to be a lot more opportunity there. And just, understanding how to use big data and machine learning and, artificial intelligence in order to bring more rigor to a number of different industries and sectors and unlocking opportunities. We're seeing a lot more of that. We have a number of investments that are taking advantage of those trends and those resources, and I expect that will persist as well. And I can honestly say that this is a really exciting time to be both a founder and an investor, because there's so much potential. There's so many things that are happening. Things are changing so quickly. And so for anyone who's into innovation, who's into change, who's into solving, consequential challenges, I can't imagine there's been a more exciting time in our human history.
That's great. That's great. I want to. It is an exciting time for sure. There's a lot of things that you talked about. I want to double click in a few of them. Can you share a little bit how are you defining Web 3.0 and what made you a believer?
That's a good question. I'm sure. So we have an investment in a company called NFT Oasis, if people want to check them out. And so when I first heard about it, my first comment was like, who's going to buy virtual art? Like, why would somebody pay for that? Right? Like, what sense does that make? Yeah, I thought it was a joke. But then I happened to be going to the same city where, one of the main founders was. We got together for about an hour and a half. And by the end of that time, I saw what they saw, right? It was, the reality is, at least that question that I had is, why does someone purchase art? They purchase art because they think it's beautiful. They purchase art because they want to support the artist. They purchase art because they think there might be an opportunity for appreciation. And then they sometimes purchase art because they want to flex and show off, right? So those are some of the reasons people purchase art. And the reality is, with Web 3.0 and the metaverse, you can do all of those things. And not only are you able to do all of those things, but in terms of the appreciation, there are more opportunities for appreciation because there's more people, and art can be sold to one person. It could be sold to multiple people at the same time, and they all get visibility on kind of the gallery, kind of wanting people to know that one owns the art. It now expands beyond just your living room. You could have millions of people in the metaverse seeing it. So that was an example of where my understanding of what was possible was limited by what we knew to be our reality. And then from a functional perspective, there are millions of artists globally who have typically been relegated to the fringes, right? Like from the economic circles, they don't do very well. So this fits into our future of employment category, as far as creating more opportunity for a whole category of people in society that haven't historically had as many opportunities, right? So historically, might have sold a piece today, and in 15 years, that piece might be sold for a lot more money, but they wouldn't see any of it, right? Whereas with NFTs, you can have smart contracts, and the artist can benefit into the future as their pieces are sold. And that's just one part of kind of the Web 3.0. But this company, NFT Oasis, they've created one of the leading metaverses. Visual and performing artists are able to participate in there. They've had hundreds of thousands of people go in very limited time, and they're scaling quite rapidly. I've been very happy with the progress that they've made, and I've been very impressed by the team and what they've been able to do in such a short period of time. And yeah, now I see quite a bit more potential there. Does that mean we're likely to invest the bulk of our capital in that sector? No, but it does mean that, our eyes are open. We see that there's opportunity there. And, for those whose interests intersect significantly with the creative space, I think there's a real opportunity there. And then especially for certain underrepresented groups that have typically been marginalized, one of the trends we're seeing in Web 3.0 is the same thing we've seen in investments. There aren't enough people of color, but people of color tend to be quite inclined to the creative. They're creating stuff, but they're not in this new space. So I think it's important that those things converge as much as possible.
Yeah, absolutely. I appreciate the color there. I think I spoke to a head of product at OpenSea, and we were talking about. I think after the conversation, I created a frame. In my understanding, you may see more startups in the space than I, but I said there's tokenization of net new digital assets like the art, right? But there's also tokenization of existing digital assets like movies, like similar to digital rights management, like you said, but a little different because it allows people to benefit financially. And then there's also digitization of or tokenization of physical assets, which we're not talking about at all. And NFTs can play a role across the board. So there is a lot of opportunity there for certain. So it'll be interesting where it goes. I wanted to shift also when you spoke about Edtech. I'm definitely a fan that education can and is already evolving, especially with COVID and more virtual education. But it's hard because educational institutions are very slow to adopt and advance, and we're still holding on to the same degree system for jobs and all of that. In what ways, in what areas are you poised and looking at opportunity in the edtech space?
That's a good question. I think one of the good things that I'm seeing is many of the top industry leaders, top CEOs are now stating publicly that they're more interested in skill than degrees. That was different from when I got my degrees, but it's important, right? So now people can really focus on learning.
That's because they realize the degrees are
in order
expensive.
to do a job, and that's quite a departure from what it was historically. I think Tim Cook from Apple has said that. The folks from Google, many of the top firms are all saying it. So that's a big deal. Number one. Number two, so much information is already available online. There's almost nothing that we'd want to know that we probably can't go on YouTube and find a 10-step process on how to do it. And so that's amazing. I think that's going to change significantly what's available to folks. And so I think we're moving in the right direction there. As far as investable opportunities within edtech, at least for me, it's been challenging because everyone knows there's a lot of opportunity there, right? And so there's a lot of noise, and it sometimes becomes difficult to decipher which will do well and which will not. I mean, I could tell you in my mind what I'm looking for, which I haven't seen yet, doesn't mean it doesn't exist. What I would love is something customized, right? So it's in the virtual arena. It's accessible to anyone, no matter where they are in the world, as long as they have access to the internet, right? It meets them where they are in terms of whatever it is that they're learning, math, science, English, etc. And it builds with them. So you could have 30 people in a virtual classroom or at their homes. They're all learning calculus, but each one of them is at a different point. Every time they go back, they're met at that same place. So you're getting a customized learning experience, which is done in a way that's socially engaging and thoughtful. And it's easy for me to say what I just said, but it's not so easy to create it and for it to work and for the team to be able to execute and a lot of these other things. But I do believe we'll be there in the next 5 years. All the tech is available, and so I don't think we're too far off. And I think that's actually a really big deal because we still have so many people globally that don't have access to kind of even basic education. And I feel like, that should be ubiquitous. And I think there will be some investable opportunities for that as well. But then, I'm sure governments and, civil society leaders will look to step into that space. And hopefully they do so in a way that engenders growth as opposed to creating obstacles for the people who would benefit from that knowledge. But that's definitely a sector that excites me. But, the deals we've done so far, and we're still new, are not quite there yet, but I'm hopeful that we'll get there. And I know you see a lot of deals. So if you see this, let me know.
Definitely. Most definitely. Awesome. Well, I appreciate, I know we've dived in and taken a bunch of your time. I want to turn it over to you. If you could share with the audience a little bit about what is next for Ozonex Ventures.
So, this next year, I suspect we'll make it, at least 10 to 15 more investments. And, a number of the companies that we've invested in already will have follow-ons, and, we'll be excited seeing them grow. We'll be looking to welcome more amazing people into our community. And, hopefully, I'll type it into the chat or Sergio can share, but, ozonex.vc/experts.
Yep, the link is in the live stream notes.
There you go. Appreciated. And so we'll be looking to grow the community to make it even more accessible and transparent and really having more people involved. It's been amazing seeing some of the testimonials that have come in from folks who have been involved in 8, 9, 10 different evaluations, and they feel like they're learning so much. So we're going to want to really do more of that. I expect us to bring in, institutional capital. Up to this point, it's been more so partner capital and SPVs. And so, we have, some solid commitments and things are coming along there. For me, this is kind of a minimum 10-year play, and not just because VCs tend to have 10-year lockups, but because what we're doing is a sea change from what's been done before, right? We're building a platform-based model to VC that can really scale to the size of needs and challenges that are out there, right? So we're trying to solve for sustainability, health and wellness, education, future of employment, fintech. These are big things. And the typical VC, the kind of capital that is under management is just not enough, right? So I'm in New York City. New York City's pension fund has over $200 billion in assets under management, and it has zero allocated to venture. And the reason is that venture funds tend to be too small, right? So this year, in the next 12 months, we're not likely to end the year being big enough to be relevant to New York City pension fund. But in the next 5, we're looking to create something that is truly scalable such that we become relevant to the largest allocators of capital, the corporate pensions, the public pensions, the sovereign wealth funds, so that we can then really unlock kind of that global brain that I described, and ensuring that women and marginalized groups around the globe who have amazing ideas and solutions for some of the biggest challenges of our time can actualize those. And so, when I wake up in the morning, that's the mission that I wake up with. And, I expect to be on it as long as possible. And, I'm really hopeful to be able to collaborate with people like you, Sergio, and some of your listeners, because, the things that we're working on is too big for any one person to do. And so I know historically it was very, zero-sum game, and, we both learned these things in school, but I think that's passe, and we need to move past it. And so, for us, it's about, collaborating this year, collaborating next year, and hoping to develop solutions, for, some of the greatest challenges of our time, and, co-creating the future of venture capital.
Amazing. Awesome. So thank you for joining us. Don't go anywhere before we sign off. But for those watching, this is the end of the live stream component. So Jacques-Philippe Desvalliers, co-founder and managing partner of Ozonex Ventures. Thanks again for sharing your insight today. So
it was a pleasure. Thank you for